Hello, this is Doug Gerlach from iClubcentral and myiclub.com, coming to you tonight with our Closing the Investment Club's books at year-end, the 2025 edition. That's right, it's another year of successful investment club operations for thousands of investment clubs. And tonight we're going to go over the tasks that club treasurers and club members need to take care of before the end of the year, to clean up their books, to make sure their portfolios are in order, and to get ready for the club tax season. It is December 16th, 2025. I am joined tonight by our crack team of support professionals, including Russell Malley, who's our club accounting advisor, and Sean Pulrang, who's our senior support representative, and Treva Dildine is also in the back office to help with questions that you might have. You can use the handouts tab or the GoToWebinar tab to access the handouts in that and download them in that PDF format, and also to type in your questions using the questions box there in the application. So feel free at any point, and we'll be taking a couple of breaks during the presentation to address your questions. But we do have a lot of material to cover tonight, so buckle up, and we'll first start off talking about what's new for 2025 as it relates to club taxes. Just a little bit of a preview. Next month we'll be preparing club taxes for this tax year. On January 20th, that is our Filing Your Investment Club's 2025 tax webinar. This is the one that will go over the process of filing a federal return using My iClub Club Tax. And then on February 17th, 2026, that should be, is our Club Tax Clinic. That is where we have our users attend and bring their questions, and we can address them, and that will help you in the final stages to prepare and finalize your club's tax return. Now, it will also remind you that conducting a club audit is an integral part of wrapping up the year, and we prepared a webinar last year on conducting your investment club audit. You can find that on our YouTube channel, youtube.com/iClubcentral. Look for that audit webinar, and that will give you the full details. We'll be talking a little bit more about the club audit in this presentation tonight. Now, My iClub Club Tax is in development. Our federal module is, we're working with the IRS. Things are a little delayed. You might have heard about a little government shutdown that affected the Internal Revenue Service of some of the departments there. But we are working and making progress on getting approval for e-filing and paper filing for the IRS, and we'll look to see that released in January at some point. We have 16 states. There are no changes this year to our state lineup. We're working on e-filing, adding e-filing for a couple of the states, the last two remaining states of that list, and so we'll see if we can make that happen this year. 5 of those 16 states have been approved already, so the team has got the necessary approvals from those states, so that is good news, and we're working diligently on the remainders. Now, just a reminder, just because your state is not on this list doesn't mean that you are not required to file. We only cover the 16 most populous states with a state version of our club tax module. There are about 9 or 10 other states that do have filing requirements. Generally, they're pretty simple and straightforward on those smaller states, but check the complete list at myiclub.com taxes, or come back in January and we'll review the requirements for those states as well. This year, there is one change that will affect clubs, a number of clubs. That is the Schedule K2 and K3 filing requirements have been eased up, and so many partnerships will be able to opt out of those forms this year. There was an opt-out that was introduced last year, but they have broadened the requirements there. So now any partnership that qualifies as a small partnership, which according to the IRS is any partnership which is not a large partnership, will be able to not be required to file that Schedule K2 and K3. Those are used for reporting foreign income. Now there are some requirements that if a member requests them, you might have to prepare that schedule for that particular partner. But otherwise, most clubs are going to be able to be exempt from those forms in the current year. Our Club Federal deluxe version remains, the price remains the same. We introduced that last year, but we have broadened the requirements to include the clubs with complex securities and lots of transactions, and for larger clubs. Those are clubs that often require more assistance and are using more forms, and so that upcharge, that add-on, is applicable to those clubs. The Club Tax Federal Basic version still accessible for newer and smaller clubs, and that price remains the same this year. Our IRS Form 7004E filing request is, that's the extension request form for Form 1065, and so we will expect to be offering that again this month. That was popular last year. If your broker is late in delivering your 1099s, you may need to request an extension from the IRS. The e-filing module is a one-time purchase and gives you an additional automatic 6-month extension. So even if you need 6 days, it's better to request the extensions. So that is something to keep in mind. The rest of the changes from last year, the club tax state charges for additional states remain at the same price. And if you are disbanding, make sure that you're using the correct version. We do have a Club Tax Federal Final and Club Tax State Final short year return modules that are used when you're disbanding. And so you can't use the regular club tax versions for that. Once you're disbanding, you need to use that Club Tax Federal Final and Club Tax State. Rosemary asks, she says that she doesn't see Illinois on the list. Illinois does not require investment clubs to file tax returns. So you're in the clear there. If we go back, you'll see Illinois is not on the list. Illinois, there was a question last year about Illinois. They had some new requirements for partnerships that had non-resident partners. But as it turns out, as you drill down through the tax code, there is an exemption for investing partnerships. So there is no requirement in Illinois, whether you have in-state partners or out-of-state partners, to file a state tax return. Ohio also doesn't require filings, so Kathy asked about that. You'll find the complete list. We'll go over them all next month at our January webinar. So the Club Tax Deluxe, I mentioned briefly the requirements. If you have 30 or more partners, based on the number of K1s, if you have receipts, which is income plus gains and losses of more than $250,000, or you have total assets of $1 million or more at any point during the year, if you have complex securities or wash sales, or if you are opting to file Schedule M3, that's an optional form unless you have more than $10 million in assets or more than $35 million in receipts. Then it's required. Some members, some clubs do elect to file Schedule M3, and that's only included in the deluxe version. So the quick and easy way to figure out if you are require the deluxe version or the basic version is to go to the Club Tax store, and then you will need to log in and select the club that's applicable, and then there will be a message here that says you must use Club Tax Deluxe or you aren't required to use the Club Tax Deluxe. Club Tax Deluxe users do get premium support. So if you have any kind of complications, that is the version that will be required for you. Barb asks about the total assets definition. If we go back screen here. Yes, if you have total assets of $1 million or more based on cost basis, that is a trigger for the IRS to file some additional forms for Club Tax Deluxe. Any club, if you've got $1 million in your portfolio at any time during the year, total club value, then that is a requirement that you use Club Tax Deluxe. Again, this is a way to help us manage the business efficiently and effectively, and support smaller clubs. And once you get to that $1 million threshold, or if you have a lot of partners, that additional upcharge for the deluxe add-on, we feel like it's a pretty nominal additional fee, especially when you consider that the alternative to giving us $139 is to hire a tax preparer or a CPA, and the average cost for a 1065 filing with all the K1s runs upwards of $700, and moving upwards quickly after that, and there are no real online tax preparation products that will support Form 1065. So we're trying to manage costs and resources, and so that's the objective here. Provide everyone with the support they need to successfully complete their club tax filings. Oklahoma is on the list, Carolyn, so we are definitely supporting Oklahoma this year as well. Colleen says, can you purchase the tax software this year so that it's a 2025 write-off? You can certainly purchase it. It's available in the store now, but I wouldn't consider it a write-off. Investment expenses are not deductible. So in some ways, it's better to delay business expenses in your investment club, because they're not going to be, all they're doing is, they're the cost of doing business, and there's no tax deduction that is available to members for that type of purchase. This is the tax return calendar. In January, if you haven't already, order your iClub Club Tax for 2025. Create the audit committee. You can be working on that in December as well, and be sure to confirm all of your transactions are recorded in the books. In February, that's when you'll be receiving your 1099s from your broker and bank. That's what you want to confirm the accuracy of all of those, and keep in mind that it might not be your records that are wrong. Often banks and brokers make mistakes as well, so you want to confirm that they're accurate. The broker does have the ability to send you a corrected 1099 if there is an error. So don't take it at face value. Make sure that it all gels with your transactions that have been entered in my iClub. Have that audit committee convene and audit the books. And then in March 16th is the deadline in 2026 for returns. March 15th is a Sunday, so the deadline moves to March 16th. By that date, you need to generate and file your IRS return and distribute K1s to partners. And then states are variously using that March 16th or April 16th deadline. So make sure that you keep it in mind. When you prepare your club taxes using our software, you will need to do them both at the same time. So just keep that in mind. Often many states require the federal return to be appended to the state return. So you'll try to keep them and do them pretty close to the same time. And that will be sometime in late March or late February or early March for more investment clubs. So closing the club's books, what does this mean? Well, this is really a series of steps that help you to ensure the accuracy of your club's books. The problem with unit value accounting is that every transaction is tied to every other transaction. And so this is how you catch errors before they compound. And once that happens, finding an error of a few dollars 3 or 4 years after it's happened can be very, very tedious and painful. So we like it when you reconcile the books, at least on an annual basis, make sure that everything is accurate, and that will help make sure that your club tax returns are accurate and your withdrawals are accurate, your payouts are accurate, etc. This gives you the opportunity as well to provide your members with details about the club performance and the results throughout the year. And it also helps you to get ready to prepare your club taxes. And again, we'll talk more about club taxes next month. So this webinar is about kind of setting the stage and getting ready to prepare your club tax return. But if your records are accurate, then your tax returns will be accurate. And so that is the objective. In My iClub, it's important to check the settings, even if you feel like you haven't touched anything from last year. It's always a good idea to make sure that you're following our best practices. For instance, when allocating income and expenses, you want to make sure that time-based allocation is selected. This is the default for newer clubs, and this is the recommendation for all clubs. So time-based allocation allows all of the income and expenses and gains and losses to be allocated to members as of the ownership on the date of each transaction. So imagine without computers, you would just add up all the income and gains and losses and expenses at the end of the year, and you would just look at the ownership percentage of all members at the end of the year, and you would just say, well, this member owns 12% of the club, and so they get 12% of all of the income and expense items, the gains and the losses. But the problem with that is maybe that member joined at the very end of the year and made a big contribution, a big member deposit, and they weren't a member when all of those income and expense items were recorded, and so it's not really very fair. The time-based allocation system would make sure that everybody gets their share of reportable income and expenses, gains and losses as of the points at which they were members of the partnership. So much fairer, and something that computerization really has facilitated. And importantly, according to the IRS and tax law, this method must be used if the ownership percentage changes at any time during the year. And simply because your club is collecting dues throughout the year, you have members coming and going, that means that for investing partnerships and investment clubs, you have to use that time-based system. So it's good to check that out. Here on in My iClub, if you go to accounting, utilities, allocation settings, the treasurer or the administrator has the ability to change this. There's a little description here. If you were formed after 2010, you don't really have to worry about it. If you were formed before 2010 and you have not switched over to time-based allocation, you should probably do it this year. The other setting is for reinvesting units at year end, and this is something that is not required. This is an old school sort of mutual fund based accounting practice where at year end, all of the income and expenses and gains and losses are distributed to partners. That means they get, it's a paper transaction. There's no money that changes hands. There's no checks that are written, but at the end of the year, that distribution would be made, and then it would be, the amounts would be reinvested into purchases of units as of December 31st. But the problem with that is that sort of artificial transaction messes up return calculations, it confuses people. And so we suggest staying away from it. We've moved away from it now, 15, 20 years ago, and said, yeah, this is not something that needs to be done. So it is the default. So again, if you've set up in the last decade, it's not anything that you would ever need to touch, but do double check it. So the option here is the first year in which your club began using the new method, without the reinvestment. So again, prior to 2010, this is something that older clubs need to just make sure they're doing. And sometimes older clubs, they just get into the habit of using it, but it is far prefer to not reinvest your year-end allocation. It is vitally important that all treasurers and all clubs identify the types of all of the securities in their portfolio. Not all securities are stocks. A security is any sort of publicly traded asset, including ETFs, mutual funds, bonds, and non-publicly traded securities are also part and parcel of that category. But the issue is that we don't always know what the securities are. You can create a security. You can, we have pricing for ETFs, mutual funds, and stocks and real estate investment trusts and publicly traded partnerships, but that doesn't mean that they are all stocks. And just because a security trades on a stock market does not make it a stock. ETFs trade on a stock market, but they are not stocks, they are securities. So it's important because tax law addresses different types of securities in different ways. So mutual funds and ETFs may be taxed differently. When you sell, then common stocks, and you may be able to use different methods like FIFO or LIFO or individual lot identification that's not available for every different type of security. So it's really important that you go through and that you adjust this and you understand it. In My iClub, you can go to the accounting tab. We added a column for the security type. So you can see on here, we've got common stock, but we do have one real estate investment trust. Again, that is a different type of security. You can hear it in the title, real estate investment trust. So it is not a common stock. It's not a corporation, it's a trust. So it needs to be identified as a real estate investment trust in your accounting. You can click on any security there in the security settings. You'll get to this screen and you can drop down that security type and you can select it. We also suggest that you can use the quotes lookup feature at the top of My iClub after you log in, get the company profile page, and that will give you also our estimation of the security type. So if you have a stock that's set as a stock-common, mutual funds set as mutual funds, we have real estates, ETFs, limited partnerships, money markets, CDs, bonds, fixed income, we have a cryptocurrency category as well. And often for these, like an ETF that holds cryptocurrency would be categorized as cryptocurrency, not as an exchange traded fund, for instance. Again, limited partnerships often are they're publicly traded, master limited partnerships, and so those need to be set as other, not as stocks. So do give that a good check. Make sure that you understand what you own. I'm always surprised from clubs who buy securities and they don't really understand them. They don't know what they just bought, what type of security it is, if it's a stock, if it's a not, if it's some other type of security. So this is something that you and your club should be educated about and should understand the difference between all of these different security types. Here's that stock quote page in My iClub, and you can see there's a security type field highlighted here that will tell you what type of security that you've just looked up. Now, we also suggest that you stay away from certain types of securities. These problematic securities will, if you own them at any point during a year, will force you to use the CLUBtax Deluxe version. They may prevent you from using e-filing because you'll have to make manual adjustments to printed tax returns. You may have to call on support for additional help to figure out how to record the different transactions and distributions that these securities may make. And the problem with that is that we've got 4,000 clubs that are all calling for help during this busy time of year. So again, you can't rely on us to be able to provide timely support for every single type of arcane problematic security that might be there. So problematic securities include gold, precious metals, or commodities, or securities like an exchange-traded fund that hold those. The IRS looks at those as property, not as investments, and so it's different from owning stocks. Real estate investment trusts, pretty light in terms of the additional workload, but it does require adjustments after distributions are made in January. Treasurer will have to go back and add transactions and modify transactions if you own a real estate investment trust. Business development companies are in a similar boat. They make distributions at year end, and those will require you to adjust all those past transactions. Royalty trusts, publicly traded partnerships, master limited partnerships, securities that issue K1s. The deadline for these securities to deliver K1s to partners is March 15th. Which is your deadline for providing a return to the IRS. So in the worst case scenario, you would not be able to file your return if the partnership that your club owned was late delivering their K1. You wouldn't have enough time to process your own return. So you would have to file for an extension. Hopefully that extension would not last too much longer into March, but that means your club members are going to be getting very antsy, as they have been known to do, wanting their K1 so they can file their personal return. But here it is at the end of March, and you're still unable to file your club return because you're waiting on that K1. So, and then the other issue is all of those values on the K1 that have to be entered and in the books, and it's a different format. You're gonna have to figure it out. So they often require a lot of hand-holding. Cryptocurrency has eased up. Some of the regulations have eased up a little bit. We're still officially not supporting cryptocurrency in my iClub. So we suggest that you stay away. Equity options, again, we don't support natively, so workarounds would have to be and utilized in order to report those correctly. If your club owns any of these types of problematic securities, we highly suggest you consider divesting your portfolio of them in December before the end of the year. That way the treasurer will just have to deal with them in 2025 and won't have to deal with them. If you waited until January or February to sell them, now you have another year, perhaps more transactions that will have to be adjusted a year from now. And so future you will thank you for dealing with these securities now. Another thing in the security settings, the IRS in the last couple of years has been cracking down and wanting more information on foreign investments and income from foreign companies. This is all part of greater scrutiny of financial institutions and wanting to know where the money is coming from, where the money is going. And so partnerships have been a target of the IRS from that perspective. So the IRS helpfully describes a foreign company as any company that is not a US company. Now, ADRs, American Depository Receipts, are always foreign companies, but other foreign companies, they may trade on the New York Stock Exchange, they may have an office in New York City or somewhere in the United States, but that does not necessarily mean they're a US company. But again, we don't always know where a company is located. So when you first purchase a stock, it may be listed by default as being in the United States, but again, that's something you need to take a look at. So an easy way to check it out is to go to the Global Diversification Report, which will list all of your companies in the portfolio by their country of domicile, their country of where they are registered. And so this report will show you different categories. So on this list, you can see the Royal Bank of Canada. That should give you a tip that's not an American company. Novo Nordisk, a Danish company. Electrolux is a Swedish company. Shell, the energy company, oil company, is a UK company, and then various United States companies there. And what So here on the advanced settings of the security settings screen, there is a country drop down that you select. And again, the quotes and information page will tell you down on the bottom right there are 3 fields actually. One is domiciled, one is primary business location, and the other is headquarters. And the domiciled is really what's important, the registration. That's where the company is registered. And don't assume that you know where a company is registered. For instance, many Chinese companies are not registered in China, they're registered in the Cayman Islands. So you need to make sure that the country is correct. So those Chinese companies like Alibaba, don't select China, select Cayman Islands. If you want to verify this, you're really not sure, you can go to the SEC filings. Foreign companies will file not a 10K and 10Q, but Form 20F. And that will definitely tell you on the first page, typically where the company is officially located. Many companies outside the United States primarily do business inside the United States, but it's important that you don't make any assumptions and go through methodically and look at every company, look it up, and verify that it is a US or a foreign company. If it's a foreign company, where is that country located? This is also a good time to make sure that every member's information is correct. To prepare your club's tax return, you're going to need the member's address, their name, their legal name, their social security number or other tax ID number, the entity type. We support individuals, trust, and custodial accounts these days. And if they are a foreign partner, that needs to be acknowledged as well. We don't support the reporting for foreign partners. Now, if you are a legal alien, you've got a green card, that's okay. But if you're a citizen of another country and not a legal resident in the United States, then we don't support that in My iClub or Club Tax, because those foreign partners require that they have taxes withheld and remitted to the IRS, and we don't support that. So that's something that you would have to handle by generating manual tax returns or find a tax preparer to handle it for you. Members can edit themselves, so the treasurer can send out a message to the club saying, please log into My iClub, make sure that your address and social security number are accurate. If you don't keep your tax ID numbers in My iClub, in the member section, you will need to make sure the treasurer has them to generate the tax returns, and they will have to type them in by hand during the tax preparation process. Obviously, we don't like that, because every time you have to type in a bunch of numbers by hand, you introduce the opportunities for errors. And misidentifying a member's social security number to the IRS is one of those problems that you really do not want to have to go through. You don't want to have to go through filing an amended return because the tax ID number was wrong on one of your partner's K1s. So if it's in My iClub, that's probably the best course of action for your club. So here's the member profile screen. It's under the People tab, so you can have your members just validate all of that different information. All right, I'm going to turn it over to Russell now. I see most of the questions have been answered, and he's going to talk about the next steps in finalizing the year's transactions.
Good evening. So one thing you might want to consider is a charitable donation. So the donation will pass through to all of the members when you do your allocation, and they will be able to take their share of the deduction on their personal tax returns. And My iClub allows you to do cash and securities, or securities only. And to the receiving charity, the securities get a stepped up cost basis, so if they sell them to get cash, they will avoid capital gains. So it's a win-win for you and for the charity. So as we move to the actual entry page, That's in the cash section of accounting, and there's a record charitable contribution link. So there's where you go. This is a screen you would see. You just put on the date, the amount, and you see at the bottom, you can determine whether it's going to be cash only or you're going to be selecting some stocks to transfer over. Now, if you're doing stocks, remember, you're going to have to talk to the charity and get account numbers and stuff. So this is how you put it into my iClub. Okay, the next thing, you're going to want to make sure all your data and finalize and be sure you have all of your data for the year entered. But there are a few things you want to avoid, okay? From a holdover from way back when I was still with the predecessor to ICLUBcentral, the desktop version had problems if you entered withdrawals or other transactions on the last day of the year. And we just want to be careful. We're following the same protocol for that. So don't enter any withdrawals or other transactions on the last day of the year. And if there are transactions from your broker or other things dated on the 31st, date them the 30th when you put them into my iClub. And there are also a few mutual funds that may pay a dividend early in 2026, but they are taxable in 2025. So you want to, when you get your 1099, make sure that those distributions from the mutual fund are dated in 2025 so they are properly reported on your tax return. Okay, and now you do want to look for problem transactions. One thing is kind of a big deal for me. Don't use member fees for use it only for penalties. Don't use it for separate accounting for club expenses. Okay, so all money going into by a member into the club should be recorded as a member payment unless you're paying a penalty. They got a bounce check or something, so they're reimbursing the club for an expense that they caused. All right, and going back to Doug's item about making sure you have your allocations set and do not do any expenses by equally allocated. You want those always by percent ownership because you can actually penalize your small owners by doing expenses and then having your expenses covered by fees and then your expense allocated equally. You actually penalize your small holders. So make sure you don't do that. Okay. And now for dividends, remember those are security transactions. They are not cash transactions. You won't properly record them if you enter them as cash transactions. They will not appear on your tax return properly. Okay, and you can check on the securities distribution report to see if you've gotten all of your dividends properly entered. So here's your security distribution. You see all of the dividends paid. These are by company and these are ordered by the date they are received. You can also have this report subtotal them by company. So all of the dividends from one company will all appear together. That might be a little easier to reconcile that with your 1099. Okay, and another thing you need to do for year-end is a year-end valuation. So this is one of the things you want to create. Just do a creation as you would any other month, which is dated 12/31. If 12/31 is not a day the market's open, it will use the closing prices of the most recent day before the end of the year. This year it's a Wednesday, so that's not a problem. And especially don't use this valuation statement for your December meeting. Make sure you put one in for the 12/31 and double check you don't have any transactions on that date. Okay, so here's how you get there. You just go to Accounting, Securities, there's a Create New Valuation. You can also do it in Reports and do the valuation statement. There's a link for a Create a New Valuation there also. Just put in the date for the end of the year. Click Continue, and this is what you'll get. You can double check the prices, and then just click Submit when it's done. You can click, there's a link to do a valuation statement from that previous slide there down at the bottom. There would be to do that, so you can generate the valuation statement right away after you do the valuation. So you probably might want to check your cash and the number of shares on that valuation statement. Any questions so far about this?
I think we're good. Thank you for that. We're going to turn it over to Sean now to talk about collecting documents and allocating income and expenses.
Thanks, Doug. So as we say here, we're going to talk a little bit about the bank and brokerage tax documents. So starting off here, should point out, I saw a question just as this slide came up of asking about doing the year-end reports and about December 31st, and I had a question a couple days ago, and I just want to say, as we go through this, right at the top, you probably won't be getting the statements to even begin working on taxes until sometime in January. You're going to get, yes, you can have access to the broker's website, and yes, you can do a lot of the figuring yourself, but really, and the person I was talking to today said, well, what time on December 31st should I be doing the year-end valuation? And I said, the best thing you can do is take New Year's Eve off, take New Year's Day off. You can do it on the weekend, it's fine. Similar for what we're going to be talking about here is a lot of the paperwork you're going to be getting won't be coming in, right on January 1st. So you've got a little bit of time. So you're going to be wanting to take a look, again, as we say, starting in January. You're going to want to start looking for information posting on the websites. I know last year I started getting emails a couple of weeks early from Schwab telling me this is when to start to expect my 1099, to start to expect the tax information. So there are certainly deadlines. It's not just completely free form, but again, a lot of those are not required right at the very beginning of the year. So you do have a little bit of time there. I'm going to talk a little bit about, here we go, the particular deadlines there. So January 31st, you've got kind of the big ones, the 1099 for dividends and distributions, for interest, for miscellaneous income, and for the original issue discount. So again, a lot of the big ones there. You also get mid-February, you get the 1099B, that's proceeds from broker barter exchange transactions, generally consolidated 1099. So that's probably one of the big ones. And then the one that we hope you only have to worry about because you're preparing the taxes for your club members is that the K1s, which have to be done by March 16th, and that K1, that's the share of income, credits, deductions, etc. Essentially everything that you're doing, doing the record keeping there. So this is, as a sort of a side note, this is why we very much suggest be careful about not getting involved in a limited partnership, because they have the same deadlines you do, which is to say they don't have to give you the K1 until mid-March. So again, keep an eye out for that. So with some of the dates out of the way, talk a little bit about doing a reconciliation. So we want to look at is obviously in best situation, all of the tax documents that you get are going to be are what you're reporting to the IRS. Certainly, this is what the brokerage is sending out. If you've had any spinoffs or mergers, merger with cash, other corporate actions during the year, you might have seen some of the write-ups that Russell has been kind enough to put together for us. And very often in those, you'll say that there are multiple ways to handle cost basis. He says, so while it's nice to match down to the very penny, please, we do want to say be aware for those spin-offs and mergers, it's possible there might be a little bit of a difference. Don't worry about that. It is okay to have a little bit of a difference there. What you really want to look at is check that your books agree with what you're getting from the statements during the year, and also the totals, essentially the receipt, the 1099 that you get at the end of the year. The brokers do have to report tax basis of stocks that were sold for anything bought after January 2011. So if your club has been around for a while, you may be familiar when the switchover happened there a few years back, that things can be a little more complex now. The big things that we suggest to check for in the 1099, you want to check against your capital gains report, the allocation of income and expense, the valuation statement, and one of my personal favorites, the transaction summary. So these are all things that you'll want to take a look at when you go in to do what we hope is an annual audit for your club. We do provide a downloadable PDF checklist. We do also, as Doug I think mentioned, we do have a webinar up on YouTube. The link is there. It's kind of a handful, but if you go to your My iClub, you click the videos tab across the top, it'll be listed there as one of the more important webinars that we want to make sure folks know about. So this gets into the, we get this question sometimes about why bother doing the allocation if I've been doing a good job with the record keeping all year. So partnerships, this might be stating the obvious, partnerships are a pass-through entity. So the partnership does not get taxed itself, but takes the total of any gains or losses and everything else, allocates it out to the partners, thus the report, the allocation of income and expense. So we do this allocation, it gets separated out according to each partner's ownership percentage. The way our system is set up in the background there, it keeps track of what everybody's percent of ownership was during the year. So when you do the allocation, it's not just looking at what did you have at the end of the year, it's going back and every single time there's a sale, a dividend, an income, an expense, it's keeping track and figuring out what your share of that was at that point in time during the club, so, or during the year, I should say. So that's what we do, and so that's the big part of the, I don't want to call it magic there, but that's a big part of what the system does, is it allows you to keep track, follow that law that says that expenses have to be allocated by capital account. So that's, again, that's what that report does. Oh, thanks, already on the slide there. So essentially, you get all the transactions entered. Once that's done, there's a couple ways you can get there. The most common one, we suggest you go from accounting to utilities to allocate income and expenses. This is done, generally just done once a year. As I mentioned right at the top, this is the sort of thing where the report is dated 12/31, but that does not mean that you need to sit down on December 31st. As I said, enjoy your New Year's Eve, enjoy your New Year's Day. The fact that you're going to get the 1099 probably in a few weeks, it should help you understand this is something that needs to be done, but not necessarily right on 12/31, in this case, not even on the first weekend after. And we do also get this question an awful lot. The report can be redone. So if something happens, if a dividend gets restated, if you have a REIT, if you had something else that's changing from regular dividends to capital gains, you can always go back and redo that end of year allocation. So just a quick little, I want to take a quick second here and say this is where, this is what the screen will look like right now if you've gone and done that. Utilities, allocate income and expenses. You pick the year, you click yes. So this is also a little bit of an extra step, as I mentioned. If you have REITs, mutual funds, there's a handful of securities we right now kind of just put in, say these are other than ordinary. You will get prompted to enter qualified dividends or unrecaptured Section 1250 gain in the case of the REITs. So there's a couple of things. REITs are one of the more tangled securities that we run into sometimes, because you also have Section 199A dividends. Again, I've mentioned you get the qualified dividends, you get the non-qualified dividends. You also have the potential to get long-term capital gain distributions. And this is, again, you got dividends during the year, you may end up getting the 1099 and find that you've got a bit of work to do to go separate out and mark all of those dividends. So the allocation will account for that. There's an extra screen that will show up. Let's say that's, as we mentioned, that'll be on the 1099. Depending on what you're invested in, you may also find it direct on the investor relations for the REIT. So again, we can dig in a little bit here. So we talk about there's the mutual funds, REITs, ETFs. These all give you regular dividends during the year, and then in a lot of cases it's the year-end 1099 where you'll get a breakdown that says, well, you might break it down into dividends, short-term gains, long-term gains, return of capital, interest. There is a sort of a laundry list of things that might happen there. These can all require, or these will all require, a little bit of extra entry in the club books. That's something we can touch on another time, I think, there. But essentially, once you do those entries, you'll get to, this is the page here. It'll show anything that you've marked in the security settings, anything you've marked as other. It will show up here. It will say, here's your total dividends. Here's your, if you've got anything that was Section 1250, it'll say, here's the total amount of that. It shows that amount in the parentheses. You put in what part is qualifying. You click submit or OK. It goes on to the next page. And it totals up everything on the report. So I'll show you a copy of the report here in just a second. But as with anything, once the report gets generated, you can either use the little email button on the report, send everybody a link, or use the PDF button that also shows up on all the different reports there. Do be careful. And again, this is the thing that we talk about of not trying to get this done too early. Is if you get that 1099 and something gets restated, you redo the allocation. Don't forget, send out a fresh copy. Go in, make sure you regenerate. The allocation is unique. It is one of possibly the only report that does not automatically update. So if you have a late dividend or if you have something restated, you do need to go back and go through that allocation process again. So I'm just take a second here and show you again. This is just a rough copy of what your allocation might look like. Again, you get the columns for the dividends, interest, capital to the different capital gains, so on and so forth. And at the end, you get the total. It says, here's your complete share, your complete dollar value for every gain and loss that has happened during the course of the year. So all that information on its own is incredibly useful. It basically gets transferred very seamlessly over to the tax software. So a lot of the numbers that you see on the allocation, you can double check, or the members can double check when they look at their K1s. Those same numbers will show up and get transferred over to the K1. So you can sort of again double check there. I'll say also, if folks want to, this is a relatively recent addition. We've got a tax summary report. It's on the reports page under the members section. It's a nice little addition, or maybe an extra that folks can look at. It basically takes all the information that would be on the K1, cuts out all the lines and sections that clubs are not going to ever make use of, and gives you the exact same numbers there. So again, it's just a way if folks want to take a look, see, this can be useful, especially if you've got someone who is in a rush themselves, but you haven't done the taxes yet. You can do that allocation. You can give them a copy of this report if they're, for some reason, desperately need to know their share of qualified dividends or interest that came in for the year. And this is something you can give them, say, okay, well, until we get the taxes out, here's a preliminary report that you can use. So I've been rambling here for a minute. My questions bar is off the bottom of the screen. I'm assuming Doug and Russell and everybody are keeping up with things. So are we good? Can I?
Yep, let's carry forward, Sean. Thank you.
Awesome. All right. So some other year-end wrapping things up tasks that you want to do. Start off with some of the reports that we suggest getting out to the members, or at least letting them know they have access to the valuation statement, 1231 for that, the allocation report, which we just went over, as well as that member tax summary report. Again, we want to be careful and say, as much as the information there, you've been doing good bookkeeping for the year, it's accurate. Be careful until the K1 has been filed. Folks should not be taking that to their accountants until the K1 is done. We also want to point out and say, if you're all set with all the accounting work and you've done the audit, it's also a good time to take a look at the diversification report, as well as the performance benchmark reports, just to take a look and see how the club has been doing. And also, it never hurts to take a look. We say complete journal here. I will say, again, my personal preference, I think, is for the transaction summary, but either one is a good report to take a look at, just a top to bottom of what the club has been doing during the course of the year. So that's, again, it's just sort of a quick summary there. You'll find your own favorites. As folks have noticed, we are starting to change over the taxes tab in the My iClub. So you can do an order, although I will say it looks like we did discover something. It's showing 2025 on the initial page. Someone said they checked and it seems like the shopping cart is reporting 2024. So we'll take a look at that. We'll get our engineering on that in the morning. In the meantime, you can also give us a call. If you want to talk to one of the member service folks, they'd be happy to put in an order. Otherwise, I suspect by this time tomorrow, heck, probably before lunch, we'll have the taxes tab store page sorted out. So if you're going in, you can go in, sign into the My iClub, go up to the taxes tab. It'll look pretty much like this. You'll click the purchase. It'll go through, and again, probably before lunch, we'll get whatever the little bug is sorted out there, and you'll be all set to go once the taxes become available. As Doug said, we expect a lot of these are going to be coming in the new year. There are a lot of the states are running a little slow this year, so don't be surprised if things are not popping up, on Christmas Day this year. And so in close out, this is kind of my bread and butter here, is the getting help. As Doug mentioned at the top, I've been doing support for versions of the club accounting, God, holy Moses, a long time, let's say. So to get help these days, we put at the top, we put the FAQ section, the myiclub.com/FAQ. That is a collection of just about every useful, helpful thing, note on how to do just about everything we've ever put together. If you do not like paging through, we have also recently added the AI chatbot, which has access to all the FAQs that we've ever posted. I believe it's also got access to every article, or pretty much every article Doug has ever posted or written on the website. So it has a wealth of information. if you're looking for something, it's a good way to start is to click on the line to get the chat bot there and ask it the question. Most likely it will find the note or notes that you're looking for. You can also of course always go into the myiclub.com/support.aspx and send us a support request. Down at the bottom there, last but not least, we do have the telephone line. That's the 877-33-iClub. Got hours, regular hours, 9:30 to 6 p.m. Monday through Friday, with extra late hours on Thursdays until 9. And as we point out, be careful, especially this time of year. Our busiest day is Monday. So if you're working over the weekend, please be aware everybody else is also working on their books over the weekend. It may be a little hectic on Monday mornings. I think we've got, yeah, there we go, a screenshot. So if you go to just the regular My iClub page, you can see across the top there, the help link takes you to our main help page. And as I mentioned, just next to that, the AI chat will also be a good place to go. And again, that's we'll wait you get to any of those help options there. So if we got, again, the questions box just sort of scrolled off the bottom of my screen as I was talking. Is there anything I should take a look at?
I think all the questions that came in, Sean, have been pretty specific, and Russell and Triva and I have been answering them. So I think we're in good shape. So thank you very much. Thank you, Russell, and thank you, Sean. Thank you, Triva, and thanks to all of you club treasurers and club members for coming out to our webinar. We'll look forward to seeing you in January, but in the meantime, we send our best wishes for happy holidays and a happy new year, and we'll see you in January at our next Investment Club webinar.